And good evening. We're doing it live right here on 790 KBC in the 5 o'clock hour, live on the air and streaming live online worldwide at KBC.com. On demand, the Mottek On Money podcast at KBC.com, Apple, iTunes, and all your favorite podcast platforms. And on the socials, too, by the way, on X, formerly known as Twitter, and Instagram. Stocks ending higher today. It's a big week this week. Today, the Fed kept its key policy interest rate unchanged as the markets expected, but left the door open for potential future rate hikes. No talk of any rate drops anytime soon. They held the line, as Toto would say, on interest rates, so that keeps the prime lending rate charged by major banks at 8.5%. The Dow ended higher by 222 points, settling at 33,275 to kick off the month of November. The S&P 500 moved up 44, and the NASDAQ Composite gained 210 points. All three of the major averages posted drops in the month of October, with each suffering a third straight monthly loss. We'll be taking a closer look and have analysis on the markets here shortly. Taking a look at the Fed statement today, the Fed said it would take into account a wide array of data in determining the exact extent of additional policy firming that might be appropriate to return inflation to 2% over time. 2% is the Fed's inflation target. The Fed also said inflation remains elevated while job gains have moderated but remain strong. They added the economy expanded at a strong pace in the third quarter. We did see the market end the day higher. Gold moving higher by nearly $6 here at $1,993 an ounce. Crude oil hovering just above $80 a barrel, coming off from its recent high, up 49 cents here now at $80.93 a barrel. And Bitcoin, which has seen quite a run, moving higher this evening, up about $130 now at $35,445. We saw shares of WeWork sink 47% today after the Wall Street Journal reported the co-working space provider was planning to file for bankruptcy protection sometime soon, according to the Journal. CVS Health Corporation stock ending about 0.5% lower after the drugstore chain posted stronger than expected third-quarter earnings, shrugging but offered profit guidance for the full year. And we see some labor unrest in the pharmaceutical world. We'll be talking labor this evening with prominent local labor lawyer Thomas Lenz, lecturer of law at the USC Gould School of Law. We see that about 900 pharmacists working for CVS and Walgreens might strike this week. The UAW and GM have a tentative contract deal. And, of course, we're watching what's happening here in Hollywood tonight with talks underway between the studios and SAG-AFTRA, the Actors Union. Of course, we're watching the very latest news coming out of the Middle East as Israel and Hamas continue to fight. We're watching the tensions rise in the Middle East. We'll be discussing the situation there this evening with Rabbi Dr. Abraham Cooper from the Simon Wiesenthal Center in West Los Angeles. Dr. Abraham Cooper will be joining me live here this evening. But first, on the markets, the economy, your money, and what the Fed did today. Let's bring in one of the top analysts here, and that is Paul Dietrich, B. Riley's Wealth Chief Investment Strategist, B. Riley based here in Los Angeles. Paul Dietrich, thank you very much for taking the call here on this big day with the Fed in focus and the news today that the Fed held the line on short-term interest rates, and we saw the market react positively to kick off the month of November after a rough month of October. Give us your view of things here at the moment.
Well, it seems that Fed Chairman Powell today made a couple of points. One, that they weren't going to raise rates this month, but that they still had not taken a rate rise off the table for December, but it would be based on whether they saw any increase in inflation. And if they didn't, and that's possible, at least in the short term, they were going to keep rates higher for longer. And right now, Wall Street thinks that they're going to start lowering rates. The consensus is sometime in the midsummer of next year. And I think he was trying to disabuse people that it's not going to be that early, that they are going to have to keep rates higher for longer. And there are a lot of people who just don't believe that we're going to see inflation come down from where we are, which is, in the 3 to 4% range, which is double the 2% rate that they're striving for. That last mile is going to be very, very hard, especially when you look out at the world and see all the things that could potentially push inflation up.
On the air live with Paul Dietrich with B. Riley, and what about the Fed's efforts to slow the economy without causing a recession? What's the view on where this economy goes from here? And will it be a soft landing, a hard landing, or a bumpy landing? What about where things go from here?
Well, I think we're going to see a bumpier landing. We are certainly not going to see a soft landing. A lot of economists, if you look at both leading economic indicators and lagging economic indicators, what you're seeing is kind of a classic rollover. We're probably at the peak right now of the economy, and we're looking at all the leading economic indicators that are pointing down. We still have some of the lagging economic indicators that are either going up, like GDP, consumer spending, things like that. But if you listen to CEOs who are talking about their earnings this quarter, which have been mixed, almost all of them are saying that we're going into a period of slowing, and you're seeing that kind of everywhere. And so we are going to go into a slower economy, and at the same time, there are so many things happening in the world right now that could cause inflation to go up, which would mean the Fed would raise rates, and it's a real problem. I mean, the Israeli-Gaza war, we could see something happen with Iran, and if oil prices shot up, that could do it. We're seeing inflation in many parts of the world, and we import goods from those places. And if goods are going up, that means we're going to see inflation coming in that sector, in those sectors, to the United States. And then you look at the labor situation. You mentioned the SAG-AFTRA negotiations. We just saw, the auto industry increase their wages by 25%, and that's going to be inflationary. And now we've seen a whole bunch of non-union auto manufacturers raising wages too. And then the worst thing, the thing that I think is most likely to happen, is that we're looking at government spending where Congress is spending new money, new deficits, like there was no tomorrow. And, this last fiscal year that ended on September 30th, we ran up a $1.7 trillion deficit, which was 23% over what we did last year. And, we've got the lowest unemployment practically in history. We don't have the COVID spending anymore, and we're still running up massive deficits. And next year, just the interest, because of the Fed's raising interest rates, the interest on our $33 trillion in debt will be larger than the defense budget. All of military spending, this will be larger, and the Congressional Budget Office says it will be the third highest item within the budget after Medicare and after Social Security and Medicare, will be interest on the debt. It's simply unsustainable, and make no mistake about it. If you want to know the root cause, it's because Congress keeps spending money that we don't have, and we're printing it, and we're devaluing the U.S. dollar, and that's another word for inflation.
On the air with Paul Dietrich from B. Riley, and here we have consumer confidence taking a hit. I don't know if you saw the reading this week, but we see credit card interest rates at an all-time high, even with the Fed holding the line today. We see the highest ever interest on credit cards at 28.93%. at last check. The prime lending rate charged by banks, charged its best customers, 8.5% at this point. We're also hearing from the so-called bond king based here in Los Angeles today, who says a massive interest rate expense problem could cause the next U.S. financial crisis. How much can the consumer sustain given these higher rates, the highest we've seen in 40 years or so?
Yeah, no, this is real. You know, we came out of COVID, and because people didn't spend money, and because they were getting money and stimulus money from the government, people had, you know, they had savings. And then as soon as the COVID kind of dropped off and people went out and they started spending that money, we saw it especially in services, people going out to restaurants, people traveling to Europe and on airplanes, all of this. And now what's happening is it's pretty clear that all of the savings that people had because of COVID, that's pretty much been wiped out. But the consumer, because he has a job, is continuing to spend, but now he's continuing to spend out of, you know, on credit card debt. And a lot of that credit card debt is 20 to 30% annualized interest a year. And that's what's unsustainable. We went over, as you mentioned, $1 trillion in credit card debt, the highest ever in American history. And that's why most people believe that you're going to see a pullback in consumer spending, because a third of what they're paying off in their credit card bills is interest. And so they're going to have to, you know, cut back on that. Plus, we saw last month, student loan debt, which is massive, had to start being repaid. So all of this is not looking good for consumer spending going forward, and that's why most economists believe that we're either hitting the peak right now of the economy, but that it's downhill from here.
All right, and we see mortgage rates, the fixed-rate mortgage rates at or near 23-year highs. Interesting to note that the yield on the 10-year note, which impacts those fixed-rate mortgage rates, actually pulled back rather dramatically today, down to 4.72%. What is the bond market telling us in all this, especially today's move, if you find that to be significant? And is the Fed competing with the markets here now in trying to find some direction here as far as long-term rates are concerned?
Yeah, that's a real short-term thing, because we're going to see in the next couple of months a huge amount of new bond sales that the Federal Reserve is throwing out there. And every time that you see those kinds of bond auctions, that's when you see the rates climb, and for a good reason. The people who are buying up bonds, especially 10 and 30-year longer-term bonds, they want to have a higher rate of return, because they know we're just printing this money out of nothing, that this is just going.
How wrestling really works and how you get the ratings. Eric Bischoff and Conrad Thompson explain on 83 Weeks.
Too much time is spent discussing talent's age. The younger demo is just as excited about a Paul Heyman or a John Cena or an Undertaker or Becky Lynch, or I don't care what their birth certificate says, they're going to draw a younger demo because they're fun to watch and they're great entertainers.
83 Weeks on YouTube or wherever you listen.
For deficit spending, and it's just being, you know, we're just continuing to add up this, and that alone is unsustainable. And so, you know, that's the biggest problem. And as soon as we start seeing some more of these longer term bonds being issued, which, you know, we're going to see, because that's the only way the government funds these deficits that we're running up. And, you know, I think Wall Street is, to use a Halloween euphemism, you know, they're whistling past the graveyard if they don't think that rates are going up, because they are, just simply because people aren't going to buy 10 and the 10-year and 30-year bonds without having an extra premium, given all the risk that they're taking by buying up the unfunded deficits of U.S. Congress.
And we've seen the bond funds down, for the third year in a row now? It looks like that's not supposed to happen, right? What is your outlook for those who are hanging on there with that? And what are your thoughts on the traditional 60-40 stock bond portfolio these days?
It just doesn't seem to be working. I've always believed that if you're an investor, you need to protect yourself when going into these kind of bear markets, recessions, or slowdowns in the economy. Whenever the economy is starting to contract, and we're now starting to see that, you need to protect your capital. And this is a time for investors to, pull back, protect their capital no matter what they have to do, get down into a fetal position and just, kind of tough it out until we get into the next bull market, which will happen eventually, but it might not be for a year or so. That we're going to see that. And right now, gold is a good place to put it. Money markets are a good place. They're paying, over 5%. Sophisticated investors can short the market, but I would not be long, and I would not be in a 60-40 portfolio because, if equities go down, you're losing there. And we've lost a lot of the gains. The Dow Jones is basically break even year to date, or just a little above it. And I think you're going to see that go down. And then you've got bonds going down. So, there are things you can do, but you need to be serious about protecting your capital and just hunkering down until this is over.
Any other ports in the storm and any other specific places where you are putting money now and or taking it off the table?
Well, again, short-term bonds, 1 to 3 year treasuries are good. Money markets are good, and gold is good. And so those are the key places where you just can't go wrong. I mean, gold's up, about 10% year to date. It's done really well this year, but right now you shouldn't be looking at hitting the ball out of the ballpark. You should just be happy with 5% in your money markets. All
right, and on this program we have the biggest fans of crypto and the harshest critics. We certainly have noticed that Bitcoin, which is up more than $100 right now at around 35,400 or so. Go ahead and lay it on thick. And what do you think of Bitcoin and the cryptos here?
Well, I'm not a big fan of cryptocurrency. There's nothing actually backing it. You make money on it. It's called the greater fool theory. If you can find someone to pay more than you paid, that person is a greater fool. If you didn't, you're the greater fool. But the thing is, this is a reaction to there are a whole bunch of ETFs coming out that will track Bitcoin, so it will be easier for people to trade. And so this is simply a reaction to what people see as that they're going to be able to trade Bitcoin easier. This has nothing to do with the underlying value of Bitcoin. And eventually, once I get these Bitcoins and a whole bunch of people buy them, you're going to see all the smart people selling.
Paul Dietrich, thank you very much for that thorough analysis here this evening. We look forward to our next conversation. Hope to talk to you again very soon. That is Paul Dietrich, B. Riley, Wealth's Chief Investment Strategist. Paul, thanks again for joining us live here this evening in Los Angeles.
Thank you.
Thank you very much. Friends, people like you and me have our ear to the ground in all things business. We like to be informed and well prepared. And as important as finance is, I want to make sure you have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well. Even still, we can get caught off guard as people are so focused on their destination that they might not have a plan if they're in an accident that's not their fault. And that's why I encourage you to put my friend attorney Clark Fielding's number in your phone right now. That number is 833-88-SHARK. So if you're hurt in an accident, you'll be ready to go with a strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlement, considering you might need long-term care, rehabilitation, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of an accident, call for a free consultation with Fielding Law. You can really trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bicycle accidents, you name it. Call 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. 790 KBC welcomes Richard Marx Solo and KT Tunstall coming to the Cerritos Center for the Performing Arts on November 12th. Tickets are on sale now at cerritoscenter.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you're caller 9. Call right now, 1-888-795-2222. Mottek On Money continues here in 790 KBC. The Fed holding the line on short-term interest rates after a two-day policy-setting meeting. The Federal Reserve today kept that key interest rate at a 22-year high and left the door slightly open for another hike down the road if inflation doesn't continue to slow. It's still running hot. The decision to hold rates today was unanimous by Fed policymakers. The Fed now weighing how much more to raise interest rates to slow down the economy more and tame inflation without risking a recession. Even though the economy did expand rapidly in the third quarter, the Fed chairman said a series of interest rate hikes since 2022 are putting downward pressure on inflation as well as economic growth. The Dow came in for a closing gain today of 222 points, settled at 33,275. The S&P 500 of 44 at 4,238. And NASDAQ gained 210 at 13,061. The yield in the 10-year note eased to 4.72%. Because of the Fed holding the line today on short-term interest rates, the prime lending rate charged by major banks as at 8.5%, holding steady. The price of oil up 49 cents at $80.93 a barrel here in after-hours trading. Gold up about $6 now at $1,993.10 an ounce. In the cryptos, we see Bitcoin up 138 at 35,445. Ethereum down 7 at 1,846. And Doge at 7 cents. Mottek On Money continues here in 790 KBC. Following the latest news in the Middle East, Israeli military authorities declaring that Israeli forces had breached Hamas's first line of defense and were approaching Gaza City, saying the deaths of 16 Israeli soldiers this week in and near Gaza were a heavy price, according to the Times of Israel. Meanwhile, the military continued to pound the Strip and eliminated the commander of the terror group's anti-tank missile system. Israel Defense Forces spokesman said that with advanced planning, precise intelligence, and joint attacks from the land, air, and sea, the forces broke through Hamas's front lines of defense in the north of the Gaza Strip. White House National Security Council spokesman John Kirby, meanwhile, condemns what he called the chilling comments made by a senior Hamas official who hailed the October 7th massacre in Israel and declared that if given the chance, his terror group would carry out similar.
The football season is underway, and Believe podcasts are talking about it.
When he went home and went to sleep, Michael Parsons was terrorizing him.
Believe has podcasts covering all 32 professional teams and many of your favorite college teams, too.
And to be only producing 15 points a game, that's something that is definitely disheartening.
Sideline to sideline, end zone to end zone.
As a quarterback, I would expect him to be acting like that. Take the accountability. Put that on yourself. Don't put it on your teammates.
Search BLEAV podcasts wherever you listen.
Talk to your specialist about Botox Cosmetic and botulinum toxin A, because Botox Cosmetic Day is back on November 15th. For one day only while supplies last. Buy one $50 gift card, get one free. Plus, if you're treated in November, you can earn double points and have the chance to win $25,000. No purchase necessary for sweepstakes entry. Must register by November 22nd. Terms and conditions apply. For prescribing information and box warning, visit BotoxCosmetic.com or call 877-351-0300. See official rules and join Allie at BotoxCosmeticDay.com.
Assaults in the future until Israel is annihilated. Israel, meanwhile, sending ground forces into Hamas-ruled Gaza after weeks of air and artillery strikes to retaliate for the surprise Hamas attack in which Israel says 1,400 people, mostly civilians, were killed and 240 were taken hostage. Meanwhile, here in Los Angeles, some Jewish businesses have been vandalized with graffiti. following all these developments very closely. Joining us live now, Rabbi Dr. Abraham Cooper, one of the most influential rabbis in the United States and indeed the world, Associate Dean and Director of Global Social Action Agenda for the Simon Wiesenthal Center in West Los Angeles. Rabbi Cooper, thank you very much for taking the call here at this critical time. Give us your reaction to the latest news here today.
Well, I think one of the challenges that we have is that many people here in Los Angeles, and especially in the UN and the media, just assumed that what happened on October 7th was the latest round between Hamas and the Israelis, and then there'll be a ceasefire and until the next outbreak. But actually what transpired on October 7th was the single largest massacre of innocent Jews since the defeat of Nazi Germany at the end of World War II and the end of the Holocaust. And we can't go into the details of the tortures and the mass murder of Israeli infants and the rapes, etc. But it fundamentally transformed the Jewish people forever. And that means all of the debates going on in Israel between the different factions have for now disappeared. And there's a great sense of unity also in the communities in the diaspora. And the bottom line is that Israelis have basically drawn a line and said, you're never going to be in a position to ever do that again. And in order to make it take place, the leadership of Hamas and those who support her all the way back to Iran, they have to be dealt with. These are not people you can negotiate with. These are people, these are movements, genocidal movements that have to be eliminated. And Israel is paying a heavy price, but it has wall-to-wall support in terms of American Jewry, but also in terms of the United States. We're very grateful for President Biden's support and for the arrival of our naval forces to send a message to Iran, not to get involved. So that's one half of the equation. The other half of the equation is what's been going on here in the United States, actually at elite universities. I was just on a call with the senior staff person for our governor. We have huge problems at various uses. We had a young Jewish student who was attacked by a mob at Harvard today. So it's the elite schools where you actually individuals, groups, some of them and some not, in which they actually have embraced the narrative of Hamas. Instead of for a two-state solution, the Palestinians deserve to have their space as well. You have the doubling down on behalf of a genocidal viewpoint. And we see this also being played out, as ABC just reported, on the streets of our own city. LA is the third largest Jewish community in the United States. You have the anti-Semitic graffiti. Words have consequence, and so we're in close touch, with the chief of police. We welcome Mayor Bass's statement today. Governor Newsom, who has taken the lead, even before this happened, in trying to see to it people just don't use the so-called freedom of speech issue to go out and to promote and back terrorists. We are approaching the tipping point of a possible national security threat.
On the air live with Rabbi Abraham Cooper at the Simon Wiesenthal Center in West Los Angeles. And Rabbi Cooper, it should be noted, I saw your op-ed article in the Jerusalem Post in the month of September, a month before the horrific attack on Israel. It was headlined, "Evil Manifests on the Streets of Gaza." This has been brewing for some time. Tell us about what you had written a month before this attack.
Well, I'm also currently the chair of the United States Commission on International Religious Freedom, so I get a lot of the bad news early. And what I see, one of the huge challenges, and maybe one of the terrible disservices we've done to our kids and grandchildren, is that I don't care if you're a religious person or not, but if there was ever a doubt in the minds of anyone that absolute evil exists in the world, you just have to look now at the available video footage that Hamas itself took. In a sense, the the Nazis in the 20th century worked overtime to try to hide or erase the evidence of mass murder, of crimes against humanity. Hamas celebrates it. So I think part of the problem right now is convincing or introducing to younger generations, look, you cannot just make believe that there are two sides of the story. Yes, you have a country here, and then you have this other group. Some people call them terrorists. Some people say they're freedom fighters. When you take a live baby and put them into the oven in their own home and kill that baby, we're not two sides of a coin. We're talking about evil with a goal to eliminate, and it's already been through it once before in the previous century. I think we owe it to young people in our society to go back to some basics and say, you know, everybody has the right to choose. In the United States of America, freedom of speech, but you also have to be held accountable for what you say, and that when you experience or see that level of evil, that's not a time for analysis on politics. That's a time for good people of all faiths to stand up and say, we have to eliminate that kind of behavior, or it's soon, God forbid, going to manifest itself in our own neighborhood. With social media today, in which you have the Hamas narrative, the image we consider to be sickening, is being used to try to recruit young people into a culture of death. And we've learned from 9/11 that you don't need mass movements anymore. You just need a few people who are going to be turned. So this is a tipping point, not only for the Israelis, and they're paying a heavy price to deal with it, but more broadly is when you have this kind of horrific behavior of crimes against humanity, it's not enough just to do a hashtag or to belong to a particular group that says we're going to defend Jews or Latinos or LGBTQ. You can't, when you're confronted with evil, words alone won't do it. And I think we've let our own kids down. We have to go back to basics, not an issue of religion or of church and state. It's a basic challenge of the human condition. What are we teaching our kids? Do they know that it's their responsibility and also their right to stand up against evil?
Rabbi Cooper, I wish we had more time. We'll have to stop there. Thank you very much for taking the call here this evening. We're going to keep an open line to you as we follow these horrific and unthinkable events that have played out, and we're watching what's happening there very, very closely. That is Rabbi Dr. Abraham Cooper, Associate Dean and Director of Global Social Action Agenda for the Simon Wiesenthal Center in West Los Angeles. Shalom to you, Rabbi, and thank you very much for joining us live here this evening.
Thank you, Frank, for being there for L.A. for at least 4 decades. You're a very special person.
Thank you, Rabbi. Thank you very much, and hope to speak with you again very soon. This is Mottek On Money on 790 KBC. Mottek On Money continues here on 790 KBC. The hot labor summer, now the hot labor autumn. We see more than 1,000 striking actors and supporters uniting today at a big rally in Los Angeles. SAG-AFTRA, the Actors Union, the major Hollywood studios, meanwhile, appearing to make progress on key issues and inch closer to a deal as talks continue today. They had wrapped up their latest negotiation session for Halloween last evening. Last word, a deal appears to be within reach. The two sides broke off in the afternoon after a day that was spent dealing with AI issues, we're told, and set to return to the bargaining table today. And as far as we know, the talks are continuing. Meanwhile, big rally today as well. Also on the labor front, looks like nearly 1,000 pharmacists working for CVS and Walgreens might strike this week. That's something new. And the UAW and GM have a tentative contract agreement. Let's bring in the expert on all things labor matters now, labor law attorney Thomas Lenz, who's with a big law firm here in Southern California, Atkinson Andelson, also a lecturer of law at the USC Gould School of Law. Thomas Lenz, thank you very much for your time this evening. And first of all, on the SAG-AFTRA situation here with the strike now, I believe it's day 110 or so here in Hollywood, still shut down. What do you see happening here with the actors' strike?
Well, thank you, Frank, for having me on. I think the news that we're seeing regarding SAG-AFTRA is encouraging. The parties are talking. They continue to discuss issues, and it sounds like they are narrowing the matters in dispute. I think that earlier on in the strike, we saw a lot of issues playing out in the media. Certainly, strike activity and picketing continues, but to the extent that the parties talk about focusing on the table and getting things resolved, hopefully we will have a resolution soon. Certainly, wouldn't want to get into the holiday period with these issues still lingering, because who knows how long that could drag things out.
All right, following the latest news here now, looks like somebody's talking to the LA Times. A source close to the studios, they say, was not authorized to comment, said that the entertainment company saw a clear path to a deal and were optimistic that a tentative resolution could be reached soon. And as far as we know, it looks like AI, a big sticking point here. I'm sure AI has come up in other areas, right, of labor law. What is the latest on that?
Well, it sounds like they're finding a way to monetize it. It's not going away. AI will be used, and it's just a matter of how people will be compensated, hopefully, in resolving this matter. And so, what's the price? How do you phrase it? And what's going to be considered an acceptable set of terms for both sides? And yes, we are seeing AI popping up in different ways, and certainly unions want to protect their members from being replaced by automation. That's been a concern over the years, in many industries, and certainly with AI in particular. It is really an outgrowth of those same sorts of issues. Should machinery that is arguably more efficient replace human beings to do work, or maybe shorten processes? And there's a cost to that, both to the workers as well as to the employer. And I think it's really a matter of finding a balance that will work for everyone.
And certainly protecting image and likeness of performers, that's got to be a big issue across the table there this afternoon.
Absolutely. The image and likeness of the actors is certainly part of their stock and trade, and it's part of what they bring to the productions they're a part of. So it will be important to them to make sure that they are not giving up too much.
All right, so everywhere you look, you see people on strike these days at the hotels. That's continuing, and now possibly at the drugstore, too. What do we know about this possible job action here involving pharmacists at the CVS and Walgreens? They might go on strike this week.
Yeah, that's a very interesting situation, because it doesn't appear that there is a union involved. And that doesn't mean that employees cannot take action related to their wages, hours, and working conditions. And in this instance, it sounds like we have a set of employees who are upset about issues related to their duties, demands that are placed on them, and they want some things to change. They are dealing with a lot of prescriptions and wanting to make sure they administer things correctly, or rather, provide the proper dosage and so forth. And many pharmacies are also now, giving immunizations, so that raises, an issue of extra duties. And so I think the pharmacists will be, certainly speaking out. Whether they will walk out is, another question, and that could be very disruptive, because everyone, who goes to the drugstore needs something, and you figure that with so many people having prescriptions, this could be very disruptive.
All right, they're calling it Pharmageddon possibly playing out, so we'll watch that closely. We just have a little bit of time left here, but on the UAW strike, we see GM has a deal here, and obviously a lot of people in the auto industry here.
Yes, there continues to be activity in the auto industry, and certainly that affects everyone. We all drive around town, and it will be important both in terms of setting a new set of terms for these workforces, as well as, I think, continuing to propel the labor movement, which is seeing energy that it has not seen, activity at levels that we have not experienced really in decades.
Well, it's certainly a lot to talk about there at the USC Gould School of Law, and I'm sure your firm is very busy. And these days, Attorney Thomas Lenz, labor law expert, with the law firm Atkinson Andelson here in Southern California, also lecturer of law at the USC Gould School of Law. Thank you very much for joining us live here this evening.
My pleasure, Frank.
Thank you very much. And our legal eagle, Royal Oaks, coming your way next on the 790 KBC News Blitz. This is Mottek On Money on 790 KBC.
Welcome to Talkville,
the ultimate Smallville rewatch podcast. I always drove the cars, the Porsche, Ferrari, Lamborghinis. They were always a little skeptical, but sometimes they go, all right, Rosie, just go up where the stop sign is and turn the car around, and we'll give you your cue on the walkie. And I go, great. And they're like, Rosie? I'm like, yeah, dude. Oh, yeah, this stop sign? They're like, yes, there's only that stop. Oh, okay.
Jump in now or catch up on any of the past seasons of Talkville on YouTube or wherever you listen.